All right, today we're talking storage wars. You get it. You got it. Yep. Let's go. Ruben Ugarte, how are you, my friend? How are things, Ruben?
I'm doing fantastic, Russell.
Yeah.
Fantastic, great. Yes,
Well,
thank you.
Ruben, I've got a very long and in-depth list of questions and that I'm going to rake you over the coals and grill you on here. And I'm going to start with the most important question. How's Mary Lou doing and how are the kids doing?
She is doing great, and the kids as well. And it's interesting because my son just got a puppy, a golden retriever, 3 months old, and she goes there to help him because he has to do other things. And she is loving that little dog. In fact, that is his name is Remy. So Remy is coming tonight to stay in here with us. So that's the big change in the family, right? So we
So
are
you have
really
a
nice.
brand new a grand fur baby, if you will, right?
Yes,
So
yes.
that would be the most important conversation that we're about to have. So Ruben, it just warms my heart to see you. It's been far too long since we've had an opportunity to have a conversation, and I saw this presentation that you had put together for a meetup group, and I just said, "Oh, that's awesome! I just need to get an update from Ruben on how he's doing and how he's performing on his project." So I said, "Why don't we have a conversation on the podcast?" And so I just wanted to just thank you for being part of the podcast here today. And I know I've introduced you to the Raising Capital Academy members, geez, probably a couple years ago now, where you did that amazing presentation on, buying like an engineer and how you analyze properties. And you
Yeah.
shared a project there where you added, was it 2 units? It was 2 units to a 17-unit building, wasn't it? Or was it one?
We added one in the basement, a brand new unit in the basement. Yeah.
And then we walk through the numbers, walk through how you analyzed it, and and that's in Sarnia. How's that property performing for you?
Oh, and I mean, Sarnia is crazy, man. The way the prices are going in Sarnia, the cap rates are shrinking. And in fact, I mean, we sold one of the buildings, not that one. I mean, we sold the 22 unit that I did also a case study way back because the opportunity presented itself. And talking about self storage, we are moving capital, from the profit of this building to self storage. So that's how we're doing because the cap rates in apartment buildings are very, very low. So we just did that. But that building that I did the presentation to the academy,
Yeah.
I would say it has increased in price at least maybe 800 to a million in price, right?
Oh,
In value.
hang
But
on,
but
hang on, hang
yeah,
on, hang on, hang on. We gotta get an applause for that one, right? Yes, well done. A nice reserved clap. Yes,
yeah.
well done, Ruben. Yes.
Thank, thank you. Yeah.
And I imagine your investment partners are quite happy about that little return that they had and putting their trust in you in some of those projects.
Yeah, they are. In fact, this week we had the what we call the AGM where we got in Zoom, and I gave him some numbers and an update on the market in Sarnia. I mean, we never expected really. I mean, my numbers were conservative back then, right when I did that presentation. But I mean, the numbers have exceeded the actual numbers because the market went really. I don't know what it is exactly, right? But a lot of people are looking for this building, so the prices are going up pretty fast.
No,
So it's a
nice.
benefit, right?
Yeah,
Yeah.
that's fantastic. Now you don't live out in Ontario, do you? You don't live in Sarnia, do you? Where do you reside at the moment?
I live in North Vancouver in BC, few miles away from the property.
Yeah, just a few miles, a
Yeah.
few miles from the airport to take a 4 hour
Yes.
plane ride away. Yes. So
Yes.
you're like one of the only people that I know going from Western Canada out to Eastern Canada to invest, and you're taking all them good properties out in Eastern Canada away from those investors out there.
Yeah. Well, yeah. Champlain is one of those stories. Yes.
Yeah. Well, we're going to get into that. We're going to get into self-storage here today. This is an asset class that has a lot of appeal to a lot of people. And we're going to dive into your story about how you got into self-storage. But speaking of your story, do you mind if we take just a little bit of a step back? Because I would imagine most of the people on my podcast probably have not heard of the name Ruben Ugarte and who you are, where you're from, what you're about. Because that accent, that isn't North Vancouver, is it, Ruben?
No, it's not. We came from Honduras in Central America in 2004, in August 2004, because of different reasons. But we landed in North Vancouver, and because there was a brother from my wife, and my wife's brother was here, so but we stayed here, and we love it. And now the kids are grown up; they live in downtown Vancouver, and so I came in here, searching for a job and a better future. And 17 years later, I can say that it was really worth it, the entire journey. And it was not easy, but it is worth it as we are right now. I mean, at this moment.
Yeah, I would imagine things are a lot different in Canada than they were in the Honduras when you
Oh,
there. It's probably, has it got better or worse, do you think, down there since you've left?
I would say it's worse. I went there a couple of months ago to visit my mom, and no, it's not a place for us
Yeah.
anymore, sadly. But it is. I mean, how it is, right? I mean, in different countries.
Yeah.
But yeah, I would not change the journey, right? That we've been through, at the moment. Yeah.
Yeah, and you're what by trade? You're an engineer by trade. Are you still in the field of engineering and project
Yeah.
management?
Yeah. I am a mechanical engineer and industrial also. I'm doing on I would say on a part-time basis, contracting. I doing audits for accreditation agencies, one in the U.S. and one in Canada. So they hire me on a contract basis, and I travel to the city where it is. I mean, I haven't been traveling too much, but doing everything online the past couple of years. But we're gonna start traveling now, so I enjoy it. I keep up on the engineering field, but the real estate part is actually, the way we're growing is taking
Yeah,
more. So I gotta balance now how many audits I can take
yeah.
once a month maybe, because it's getting to it. Yeah.
Are you going to get close to potentially leaving the mechanical engineering side of things? Are you getting close to the execution of that plan that we talked about a few years ago?
I think so. I
Yeah.
I I keep doing it because
Ruben, I
I
know you. I know you, how tight you are with the numbers and the tolerances, and you have it exactly down to the penny, probably. And you're just being humble of saying you think so. You're going, at the current run rate, Russ, it should be in 17.2 months away from now.
I
I'm
like
teasing you, Ruben.
I
I'm
like
teasing you.
that.
But that's
Yeah.
awesome. That's congratulations. So ballpark numbers, if you wouldn't mind. Portfolio of singles, multis, self-storage, all the thing in asset, like in a dollar amount. What kind of ballpark do you think your portfolio would be at now for dollar amount?
I haven't done it recently, but I can tell you currently, before we close on that 22 unit, let's say as of today, right? Because we're gonna close on November 15th. The story will be different, but right now it's 52 units in apartment buildings and 159 units in self storage under control. And what you told me that time they called revenue units.
Yeah.
Yes, it's 159 revenue units in self storage.
Wow.
Yeah,
So 150 and 52. So we're talking like 210 revenue units, give
yeah,
or take.
yeah, yeah. We are there. Yes, about 200 and a bit. Yeah,
Wow.
and
And
yeah,
when you first came to Canada, how many pieces of real estate did you have at that time?
just the house that we had in Honduras. Yeah,
Okay,
not
right.
in Canada. No, not nothing.
And some of this growth, this meteor, you've actually grown it fairly substantial. It's been within the last, within 5 years, has it not, Ruben? Or
In fact, yeah, because we bought that house in Port Coquitlam in 2007, but we stayed with that house for a few years until we sold it. So the journey really started in 2015. I mean, with this other commercial when we went to Ontario the first time, and yeah, 6 years, 6 years, I would say. And
Wow.
if you ask me about portfolio, I would say that it's over, I don't know, maybe 5, maybe 6 million
Yeah.
portfolio value. I
Yeah.
mean, give or take. Difficult to kind of assert at this moment because the prices are changing and Champlain is changing. But yeah, I mean, yeah, we
So
focus on cash flow, right? Basically.
yeah, so
Yeah.
realistically it's been 6 years and you've added those portfolio and for those of you if you're listening, I might date both of Ruben and I. Ruben and I are of similar vintage of age. So when did you really kind of start? At what age did you kind of start, Ruben?
And in
How
real
old were
estate,
you in 2015 when you kind of started
oh,
this journey?
55.
55. So you started this real journey at 55, right?
Yeah.
So guys, if any of you are listening and you're saying, "Well, I'm too old to start and I can't do that." You're looking at a couple people here that, you know what? Sometimes it's okay to start later in life because you have so much more experience and the runway gets a little shorter, doesn't it, Ruben? The
Oh yeah.
urgency starts cranking up a bit, doesn't it?
Yes.
Right. Okay. So let's pivot here. Let's have a good conversation. So you were buying, you had the place in Port Coquitlam, you had a few different places. Did you go, you like it was one townhouse if I was correct, and then you went right into multifamily, did you not?
Yes. What happened is, the story is kind of short. From React members and another friend, they started talking about Sarnia, that they buying cheap houses and that kind of thing, and Windsor. So we had a couple of friends there, so we took a quick trip 1 week. We went through several small houses. Yes, small detached houses, and back then they were about $80,000. I just didn't like the idea. These were old houses. So I returned actually back a few months later, and I met with a commercial realtor. And I just pitched the idea. Say, do you have any small multifamily? I didn't know anything about multifamily really. And so he gave me next week. I mean, the following week of that, he gave me that sixplex that it was listed. Nobody wanted to buy it. It was for 350,000 and cash flowing. I did the numbers and said, wow, this is okay. So that's how it was. So we found the investor in the React group, and so we went from there. From that one to the 22, and then many trips to Sarnia. I was going almost every couple of months, or maybe it'd be less. I was, flying from here to Detroit, from here to London. I was going different routes. We have fine tuned that
Yeah.
now, but yeah. So I had to be there many times.
Yeah.
Yeah.
So you literally just jumped right into the commercial space in many respects, right?
Yes.
Into a small multi, which then went into a larger multi, and then you went into another multi, and then you found the whole wonderful world of commercial about being able to find and convert, add another unit to it, raise up the income on the properties, refinance, new cap rates, all that kind of wonderful stuff. And so what made you transition into self-storage?
I was thinking, I mean, when we got to the that 17 unit building, and I mean, there are different challenges, right, in apartment buildings. I was thinking about self storage I mean, for some reason that, like you say, is attractive. And then I don't know if this is thing of the universe or the law of attraction. And then the realtor called me one day and he said, well, there's this lady that wants to retire, and she wants to sell the self storage. Do you want to take a look at it? I said, okay, yeah. So he sent me the numbers. He negotiated the whole thing. I mean, he's a great realtor. So he negotiated the whole thing. And so then I went to the same investors that own the sixplex and the 22 unit and said, hey, why don't we add, self-storage in here? At the same time, I didn't know anything about self-storage, right? In terms of managing the self-storage. So it was a very, very quick learning by the time we got into the inspection, closing, and then the pandemic hit. Actually, we closed 15 days before the lockdowns. So I managed to make it to Sarnia and put in place the software and all of that, but then I couldn't travel for a few months after that because it was locked down. But now the self storage was under control, right? So we had to move forward, right? With 70, we had about 70 clients that we inherit from the previous owner, and so we had to do everything very quick, really very quick. In a couple of months, we had to do credit card software, connect with everyone to pay credit because she was actually handling every transaction in a notebook. I actually saw the notebook and I said, "This is not the way that we're gonna manage self storage in a notebook. So it had to be something else." So that's why we got into the software.
Yeah.
Yeah, that's how it was.
Wow. So I would imagine now. Here's the thing: is I'm very familiar with the concept and the theory of a lot of these things, but I have never owned a self storage unit, so I'm not going to sit here and profess that I know everything about it. But I would imagine that the self storage world would operate and the analysis would be fairly similar to almost like a multifamily type of a residential commercial financing based upon cap rates, based upon incomes, based upon stuff like that. But let me hear from you. Why, first of all, why self-storage? And then we're going to talk about some of the similarities and some of the differences. So why self-storage? Did you want to pivot to that?
Okay. We found out, from the theory, I kind of read and knew that it was easier. It had less number of problems because you don't have tenants. You have clients that put their stuff in there, but you don't have a tenant. So there is no tenancy act. There is no tribunal and that kind of thing. So for that, that's a big advantage. But then when you look at the numbers, and I ran the numbers, the expense ratio that the self storage is producing is way low. I mean, we are operating the buildings. Just to give an example, right, on the buildings. If we're gonna jump into that, the expense to income ratio, is about 55, 60. Sometimes there are months in those buildings that we operate about 70% expense ratio. That's pretty high. If you do a unit turnover and all of that. In self-storage, both of those facilities are operating about 37%, 38%.
Wow.
So when you see the difference, right? I mean, it goes right to the profit line. I mean, when you don't have that much expense, I can explain a little bit later why, but that's what kind of, when I saw the numbers and I got the price and all of that, I just said, we just have to learn it, how to manage it correctly and improve it. So that's, yeah.
And so you had no idea about any of this kind of stuff, did you? How did you learn it? Like, what were some of the steps you took? Like, you had some residential multifamily properties under your belt, so you kind of understand how the financing worked. You understand how to analyze the properties. You understand about the adding the value, the cap rates, the expense ratios. You understood a lot of that. But what was kind of the pivots you had to make in your education and your knowledge to pivot over to self-storage?
I would say read material. I got in touch with the Canadian. There's a very strong association called the Canadian Self Storage Association. They help us a lot. I mean, they are very, very open in that. So I participated in a couple of meetings. But basically, I just had to say, we got to find a software. So I started looking around, what kind of software runs these facilities. But I never actually talked to one person that will own a self-storage to kind of guide me through that. It was a little bit of a trial and error, and how to find out, how to connect this software with Moneris so people can do credit card. That was the main thing, because you got to put this thing online very quick. If not, then, it's not going to be able to rent. But yeah, I mean, reading material, a mentor of mine gave me also a good material that I read, and so that's how it was. I guess and it had to happen. It happened actually in about 2 to 3 months, just before closing, right? Because we had to be ready. We already had it on their contract, closing and everything. I mean, so yeah.
So you 100% subscribe to the let's learn by doing a deal, Right?
I would say, yeah, I was not. I mean, after doing those buildings, I was not, I would say, afraid of
Yeah.
getting into a new class of asset because I would say there could not be any bigger problems than what we had in the apartment buildings,
Well,
right?
especially, sorry to say this, Ontario investors, your landlord and tenant rules out in your province are dra-
Oh yeah,
are draconian in
Uh,
its respect. And I'm sorry to say, I'm just being honest with what I've
yeah,
seen. And Ruben, you would have firsthand knowledge of that as well. But don't get me wrong, I'm very envious of those big giant appreciation numbers you guys have seen at the same time over the last decade too, out in Ontario at the same time.
yeah. Yeah.
Okay, so self storage, you've pivoted over to that. What are some of the challenges with self storage?
Okay, I think the one of the challenges is financing.
Mm,
Because a lot of the lenders and then say the big lenders they really like apartment buildings, but they don't like too much the self storage. And when they do the analysis on the self storage, they actually cover the risk, pretty, I would say, pretty big, in the sense that they will put a high cap rate. I mean, they would not go under 7%, which makes the value comes down, and they will not go over 65% loan to value. So so we need to put more money down payment and closing costs in a self storage than in an apartment building. But we just found a new lender, is a credit union in Sarnia, that they love self storage, and they really are going to help us. They offer us already for the new project, kind of more than 65% actually. So that's, I would say, that's one of the challenges. I think the other challenge is how to control the entrance of in and out of the people. They are all kind of systems, automatic systems. They are a little bit expensive, right? An electric motor, a fob, different things like that. So we don't have that yet in our facilities. We are using a, how do you call it? I'm not gonna a primitive method, but it's actually a mechanical method. They get a key, they get a code to a logbox, and on the logbox they find a key. I mean that's I mean
well, it
that's
works. It
it
works.
works. It works, and then everyone keeps the key when they move out. They drop the key in there. So that's another, I would say, another challenge. But I think in depending on the area, the main one of the main challenges is land, because the self storage actually needs land, extra land. There is no point of buying a self storage that doesn't have any land to grow, because like in the apartment buildings, there's not much, you can increase the rents and all of that, but it's not as in the buildings, right? Because it's small rents. So the way to increase the value is to add one more building or portables. I mean, there are very nice portable units that you can add. So land, I always recommend that if somebody asks me, I say, well, you need to find a place where you have some extra land,
Yeah,
1 acre or two, right?
yeah.
To put more buildings. Yeah.
Or underutilized footprint of the units that are currently in place. Something that you can add more storage units to the property, because that's where I would imagine that's where the big cherry on top is for this asset class.
Yes, yes.
Yeah.
Sometimes you can subdivide depending on the size of the units. I was looking at a self storage actually in Alberta. That when I look at the drawings, I said this is very clear. I mean, they could add more units by just putting a partition here, and right there you increase the income when you add more units. That's one way of doing it, depending on the building, right? On the type of the or the configuration of the building.
Yeah.
Yeah,
Now, one of the things when I remember in one of our conversations, I had asked you the question about, and you had just this
absolutely.
wonderful, yeah, and you had this wonderful methodology that you had learned about how to determine kind of the demand for rental units in a certain area. And then the question I'd asked you was, how do you know that there's a demand for these units that you're buying in Wyoming, Ontario, in Sarnia, in Champlain? How do you know that there's a demand? And there was a wonderful formula that you kind of applied. Do you mind walking everybody through that?
Yeah, there's actually two ways to calculate demand. One way is, well, you get the facility where it is. I mean, and Google Earth now is a very good friend for that. So we have to kind of draw a circle, which is about, I would say, 15-20 minute drive. That might be maybe 10K, 15K around the facility. And then we find all the competitors that are inside that circle. And from the Google Earth, we can come down and measure the buildings. Everyone does it like that, right? So you come from the top and you see your competitor, how many square footage they have. And so make a little table and say, okay, well, competitor number one has, 20,000 square feet, right? Just to be an example. Competitor two. So we find the number of square footage installed in the area. So that's the first step. So we need to find that, and that has to be with the drawing, with the Google Earth. Once we know the square footage, then I go to different places, right, to find out how many houses and how many people live in that same radius. And like Canada Post, I learned that through somebody else, but Canada Post has a nice tool. It tells you how many houses, how many apartments, how many single family houses, how many businesses are in a certain postal code. So once I have that, once I have, okay, well, I'll give you an example. Let's say we got 20,000 people, right, in the area, just everyone living in there. But they are, I would say, it's about, in 20,000 people come out an average of about 2 people per house. So it's about 10,000 houses, just to give you a number, right, round it off. So now we got 10,000 houses, 20,000 people. So now we have to test, because in Canada, there is a number that, like the appraisers, they use that number, because they told me that. They use that everyone in Canada will need about between 4 and 5 square feet per person for storage.
Okay.
In the US,
outside storage, outside of home storage.
Outside home, yes.
Yes. Okay.
Outside home.
Yeah.
So in the US, it's actually higher. There are some places that they need 8, 9, and 10, right?
Oh, they collect more junk, maybe.
Right. So the first calculation is, okay, I got 20,000 people. Let's say I'm going to use 5. Okay, so the demand, theoretically demand, is going to be 100,000 square feet, right? But I find that the competitors, or sometimes including ours, we have only 50,000 square feet installed. So right there, it gives you a deficit of square footage just on the people, right? But then they taught us, in another training, they taught us to use the number of houses. And so now you go back to the number of houses and you say, okay, 10,000 houses. So what they use is 10%. So you say, okay, so 10,000 houses will rent 10% units, right? So that right there, you say, oh, so now you need 1,000 units. So
and so far have those ratios held true for
oh yeah in Champlain yes in Champlain and in Wyoming. And so what happened is now we got 1,000 units, right? So I said, well, what does that equate to in a square footage? So they use another number. They say, well, it's an average of 130 square feet per unit. Okay, so now you need 130,000 square feet on the number of houses.
Yeah.
Okay, so right there, you have only 50,000 square feet installed. Okay, so now you got a what do you call an unknown in there, because you will need between 50 to 70,000 square feet of demand that is not satisfied.
Wow, you have a serious supply demand issue, and you have a serious supply with not enough demand. So
correct.
Hang on a sec. Woo, you're bringing some fire, Ruben. Holy moly, hang on a sec. And when you bring the fire, a bomb gets dropped in.
I like that.
So guys, I know Ruben went really quick, and my 6th grade Saskatchewan education here. I do have grade 12. I took grade 6 twice. So really, what you really do is you do a high level diligence on where you're going to acquire an asset. you kind of draw a radius around it. You figure out how many people, how many houses. You apply a couple factors, and then you apply that to how many square feet or units are in that area to see if it's undersupplied or oversupplied. Is that a simple way of putting it?
Yeah, correct. I mean, just to give you an idea, in Champlain, when we did that with the number of people, because you can say, well, that area has only about 30,000 people. So the calculations gave us on the installation, all of that gave us, before we opened that facility, gave us that there was about 800 units deficit, give or take, right? About 800 units. We were opening only 56. I said, well, we're gonna rent this in about a year. That was my calculation. So it got rented in 6 months.
Wow.
So okay. So what happened? I said, well, people were waiting for another, because the other facilities. That's another way that we do it. We call the other facilities, and they say, no, we don't have any units available. So if a facility doesn't have a unit available, they say, I want a 10 by 10, and they don't have it. It means that they are running a very high occupancy, which means there's a need to expand because people are looking for these units. So there are different criteria that we throw into the mix to say, well, comfortable. We can put, like, I'm confident that in Champlain we can put another 100 units, and we are not gonna dent the demand.
You'll probably have those rented in 6-7 months or less. Right.
Yeah.
And you ended up buying that property out of foreclosure, was it not? I believe was that correct?
Yes.
Yeah. So how does somebody find one of these? First of all, is it primarily just through exclusive through agents, or how does somebody? And as we all know, everybody sits there going, "Yeah, I want to buy a self storage, but there's not a lot of these available." To be honest, how does somebody locate a self storage property for sale?
Well, we use the realtor, like in Sarnia, where he operates. He can find, and he actually is knocking on doors. And the next project that we are doing right now, which is in Petrolia, it was obtained like that. We have one facility under contract right now. That's why we're raising capital to close. It's a 70-unit facility, but it's under contract, right? We haven't removed all the conditions, but we are in there. But that one was found because our realtor kind of talked to that guy for close to a year until he decided, okay, I'll sell it. If anything goes into the MLS, it goes pretty fast. I mean, I've been through the MLS and it goes pretty fast. The one in Champlain, I would say, you can say luck is when you're prepared, right? I was just, because I do that, I go through the MLS and Realtor.ca and Kijiji and all of that. So I was in Kijiji, actually. That property was in Kijiji. It popped out when I was searching for self-storage, and it was just a little ad that it says, property for sale, and the two little buildings, those two red buildings, they were in the picture, right? And I said, what is this? Why is these two buildings in the middle of nowhere? I mean, I knew that those two buildings right there were worth it about close to $300,000.
Is this one of them here, Ruben?
Yeah,
put a picture up here.
One.
This is so nice unit, lots of space and wonderful things like that there. So
yeah.
So really, it's the old-fashioned way, if you will. It's relationship, and it's good old-fashioned digging, really, to uncover these. Okay.
Yeah.
Okay. So let's say you've uncovered one, and you've done it, and you've done the analysis that you've talked about, and there seems like there's a demand for this, and so you're interested in acquiring a self-storage unit. What's the part of the process you do next? Do you then take it to a qualified mortgage broker to give you a financing opinion, or do you write an offer? Walk us through a little bit of the process there, please.
I will write an offer. Like I'll write an offer and I do the analysis later.
Yeah,
because
shoot first, figure out after, right?
Oh yeah, I put enough number of days that will allow me to make decisions, to find a lender, and all of that. Like in the one in Champlain, I tell you, I was on the phone with the guy that was the caretaker. because I asked him, I said, show me the property over the WhatsApp. I just want to see the unit. So he did that favor for me right before I flew there, because I was interested. And it was interesting at that case because he was walking around the with me, right? I said, hey, this is the unit. So I was kind of on his phone. I was looking at and I was recording it on my computer. So I was looking at the units. There was a lot of junk actually in those units for many, many years. It was abandoned. This place was, actually abandoned for about 10 years. And so when he was walking, I said, okay, well, that's it. And he said, hey, there's someone in here. I gotta go and talk to them. They are interested in the place. So he puts his phone in his pocket, and for whatever reason, he doesn't disconnect the phone, right? And he started walking with the other people, and I just said, I'm just gonna keep listening, right? And the guy started asking the same question, hey, this and that and that, and the other guy was telling the other guy, said, this place, looks good, and we can put it to work. They had another storage about half an hour from there. I said, okay, this thing is gonna go now. So I hung up. I called the realtor and said, I need to put an offer now, today, right? So that's how it was, right? I mean, he never knew about that, but probably they will buy it. I mean,
Wow, a little unauthorized surveillance that was going on
yes,
there.
yeah,
A little reconnaissance mission. What a cool story. That's very cool.
Yeah, it's cool. I mean, I can tell it now. I can tell the story now, but it was, I said, well, but yeah, I at that moment, I think they were ready to buy, right? That's so.
Yep. So okay. So in your world, you write offer first, figure it out. So okay, so you got the offer first. What kind of is it on a traditional purchase and sale agreement? Is it more of a commercial agreement? What kind of terms do you typically put in it? And then what's the next step in the process after that?
It's a commercial. I normally will not do it myself. I mean, if the realtor can do a dual agency, I do it. In Ontario, they can still do it. I don't mind. But I put my terms, and normally it's the financing, the inspection, my visit. I mean, my visit is one of the conditions. So I put that me or someone, my representative, will visit the units and we'll decide if we like it or not. I mean, just like that is my condition, besides the inspector. And then we get, lender. Those three are the main ones that will give us a green light to proceed or not proceed, right? And then if it's an inspector I hire, now I got a guy that can inspect these buildings. This is a different type of inspection. This is not a home inspection, right? It's someone that needs to know about these buildings, the type of buildings, right? And what are the things that can go wrong with these buildings? So yeah, now we have that inspector in Ontario.
Yeah, and then imagine, so you get the offer, you have the conditions. I would imagine part of that's to get the financials and get you compile all the financials up.
Yeah,
and then you approach. What kind of lenders do this? Are they the typical kind of lenders, or are they tier 2? Is it private lending? What kind of lenders do you approach then?
Well, in Wyoming, in Plimpton, Wyoming, the first one that we got, CIBC did the financing on that because we already had the other buildings with them. But in Champlain, that was part of the story, because Champlain was under, it was a foreclosure, but it was a mortgage company that owned that property, and they just wanted to get rid of, because they were trying to sell for, I don't know, about 3 years. And so they gave us 85% loan to value on that mortgage, but only for 3 years. So that's the strategy that we're following. We had to refinance Champlain in 3 years, less than 3 years, in 2023. And for this one in Petrolia, then is this credit union called Libro. They like the self-storage industry. So they are different. I mean, the lenders, RBC has been interested as well, but we haven't done any self-storage with RBC. But it's still an option.
Yeah. Are you typically going through a broker, or are you doing most of it direct to the bank yourself?
I do it direct. Yeah. I've been doing I do all of these things direct with the lender. Yeah.
Yeah, and I would imagine there are brokers that do that kind of stuff in the
Oh yeah.
commercial in that world. But you've already got the experience, and you probably have all the financing packages and everything already done, and you just kind of know the dance, if you will, right?
Yes, yeah. I mean,
Yeah.
this we still have to go through all the documents that they require. The appraisal, and environmental if is needed, all the net worth statements
Yep.
and that kind of thing. It's the same. Right? We have to just repeat it. I mean, with the lender.
Yeah.
Yeah.
So in the case that in the Champlain property that you bought, the current owner, which was the bank, gave you some pretty juicy, essentially self-financing to do that. Now you
Yeah.
have a little bit. You have 2 years. Is it 2 years left in that, or 1 year?
Yes.
2 years
Two
left.
year,
Yeah.
2 years left. Yes.
But it sounds
Yeah.
like you've got it turned around and you've got it operating really good. It might be really quite easy to turn there. But by and large, as you said, most lenders will only go up to like 65% loan to values, give or take.
Yeah, and
Yeah.
in anyone that comes into refinancing Champlain because Westboro is not interested, they got a different. So they told me that say, okay, well, in 3 years, you need to bring in someone else so they can move away. But anyone that comes into that one will be around 65%. So that's what is planned in the analysis. That's what we're gonna get. But it's still the value of Champlain compared to what we purchase it is gonna be a lot higher, right?
Yeah.
Yeah.
So you really need to have, you need to have the income up on those properties by the time that financing comes, and you need to have the numbers running pretty good by then.
Uh, yes, and
Yeah.
and the land also has a value. See, that one is another peculiar thing on this one, right?
Yeah.
It came with 22.8 acres of land,
Okay.
so that's a big piece of land. I
So you
can
got a
tell you that.
big unused piece of land there that you can actually start pouring some foundations and start building more units on it, can you not?
Wait, oh yeah, we got. I
Yeah.
mean, we are not using. I think maybe about 2.5 acres at this moment where it's sitting. So there's and the land has value because this is industrial commercial land in a small town. So the every acre in that land has a separate value from the building, which in the purchase was not even
Yeah.
accounted for.
So did I hear you correctly? You're only using like 2.5 acres, and you got 240 acres.
No, no, 20,
Oh,
20,
sorry.
22, 20, 22, about 22 acres. I mean,
So
there's a
you,
creek in there. Yeah.
okay, so you have 22 acres, and you're only using about 2.5, give or take.
Yes.
Wow.
Yes.
And
Yeah.
what did you buy that one for again? Refresh my memory.
We bought it for 415,000.
$415,000.
That was the final purchase price. Yes.
And the lender financed 85% of it, essentially gave you 85% loan to value on it. And what is that unit now? You said you filled it. Like when you bought it, obviously because it was vacant and there was only thing in there was probably, ghosts and rabbits, if you will. What's the gross rental on that property now, Ruben?
At the moment, we are reaching close to 8,000 a month. So that's. I think that property is gonna reach about 95, maybe 100,000 in the next 12 months without expanding.
Yeah.
Right, with what it is in there. So that's how we're gonna be reaching now.
Well, so with no expansion, you are potentially getting in 4 years of gross rental income, you've got your entire purchase price covered.
Yes.
I know there's obviously
and-
there's expenses and there's lots of
Yeah.
expenses, but you've just shared with us too that the self-storage is actually a more efficient expense operation as well, is it not?
Yes, Champlain is operating at the moment about 37. The last calculation that I did last month, so it's about in that range. I mean,
Yeah.
it can change, but when you factor insurance, property taxes, we have to pay all of that, and the property manager that we have there, expenses in maintenance are very very low. There is no water, there is no toilets, there is no gas. There is only electricity to power the cameras and the lights. So that's why the utilities are kind of very low in comparison to the income, right? And that's basically. I mean, the biggest expense actually in one property like this is snow removal and landscaping, because
Yes.
the property is so big that, I mean, we cannot. I mean, it's not easy to negotiate. And Champlain also is heavy snow falls, and so I can tell you that expense goes about somewhere between 10 to 12,000 a year on it. So it's actually the biggest expense is then the rest of the expenses in a yearly basis.
Yep.
But we cannot operate with that
Yeah.
without that. Right?
So you've been operating for that property for over a year now. Is it over a year?
Well, we bought it in September, but our first client actually came in November 15th. So we are approaching the 1 year
1 year mark.
anniversary of our first client.
Yeah.
November 15th, I remember very clearly. That was the first client that rented a 10 by 10. So
Did you have a little party?
yeah, we did a little bit of celebration.
So
But
the run rate right now for gross is over $8,000 a month, give or take. Is that correct?
yes.
Okay.
Yeah.
What do you think
yeah.
of what is your net kind of working out to? Like, what is your run rate for your net cash flow on that property?
I will estimate that it will run about between 2,000 to 3,000 a month.
Wow.
About that. I would say conservative, maybe 2,000. I mean, depending when some of the expenses come in, but yeah.
2 to 3,000. And so if you only had to put up 15% of 400 and change is what, 65 grand? Is that about like how much did you have to put up front?
Okay. So we had to build a chain link fence,
okay,
which was pretty big. I mean, it was 1,100 feet, linear feet. So that was a pretty expensive fence, but the city would not allow us to operate without the fence, and we had to repair some things in the buildings. We changed the roof, cut the grass, all of that. We ended up putting about 175,000 cash to close and to repair the initial repairs, just to be able to get the permits, because we had to get the permits closed before we rented.
Right.
So we had to do environmental testing. We actually, in that one, we had to do phase 1 and phase 2 because there was a little bit of concern that it was some contamination, but there's nothing. It's clean because there's an industrial neighbor on the other side of the creek. So we had to do all of that before we got all the approvals. So overall, that's what we did. And now for expansion, we had to get more capital this year actually, from private lenders in order to get to the next step, which is gravel and
right.
portables. Yeah.
So you had to put up about 175 in cash to close. So if I'm just doing some quick math, so probably you put in like 130,000 in renos and fix ups, and so. Yes. If it was what was the purchase price again?
415.
415 plus 130. So you're into it for, what is that? 415, 130, 580. So you're into it for around just under 600.
Yes.
As an acquisition cost of things. Okay. Okay.
Yeah.
Oh, yeah. Wow. It's fun. So how did you, the $100 some odd $1,000 to close on? Where did you come up with that at that time? Did you just look into the bank account and ask Mary Lou to write a check, or how did that come about?
Something like that. It was a line of credit that we have on this house. It was a step line of credit that we've been using. That has been kind of a rotating line of credit because we use it for the buildings, and so it has helped us to get this cash right when we need it, and then the property will pay the interest on that line of credit. Is factoring into the expenses. So we just move it to that, and so it's been working. Eventually, when we do the refinance, we'll cancel that line of. I mean, we'll cancel. I mean, we'll put the money back into the line of credit. Yeah.
So man, this deal is getting better all the time. It's essentially it's 100% financed, and it's 100% financed, and it's cash flowing.
It
And
is.
once at your run rate now is $2,000 to $3,000 a month in cash flow.
It is. I mean, it will.
Wow.
I think it's reaching right now around that number, right? I mean, we've been changing because what happened is if you see the curve, and I show it on the meetup, the software shows the curve of growth, and it goes from here is the hockey stick. It went like this, right? It's nice to see it, the way it goes, but now it's kind of getting in the plateau because we don't have more units. We are planning to add portables. I'm in the middle of getting a quote of adding portables. This company in Ontario, they make the same type of building, but they make it in twos, in 10 by 10. It's very nice. You lift it with a forklift. So we're gonna get a few of those because we don't have any more units. We need to put one more building, and people keep asking, right? We don't have any 10 by 10s, for example, right at the moment. So the people send us an email, hey, you have a 10 by 10. I said, no, sadly, we don't. So we need to add a few more portables kind of very quick because the winter is coming in a few weeks. So yeah, we have to do that.
Okay.
But
So
yeah,
wow, it's a nice business to be in when people are phoning you for something
and we
and you
don't have
just
it.
yeah. So what is the expansion plan for this project? Because I know you're the man with the plan, and you got plans for everything, and you've got multi-phased plan out here. So the first phase is to get some portables to just capture some revenue and some demand. What's the plan after that, Ruben?
Okay, the second phase, and we call it like that actually, phase
Yep.
phase phase two, is adding two more buildings. The buildings can run between 4,000. A good building is about 4,000 square feet. So adding two more buildings to add close to 60 more units in a building that is in a concrete pad. So that is the plan that we are joining with the one in Petrolia. We want to put it all in one roof, and also Petrolia has room for expansion. So for another two buildings, maybe another 50 units there. So yeah, so that is the first phase, but we are pitching to the township of Champlain to give us more space within the fence in a site plan amendment. So we are working right now, with the township because we want to put four buildings actually inside the fence. Even before going outside the fence, outside the 3 acres, we still can put four more buildings, which will produce another. Each building produce about 3,500, so it will produce another close to another 15,000 a month on gross revenue if we put four more buildings inside the and we have the space. The space is already there to put four more buildings. You just need the the
Wow.
township.
Ruben, I'm just sitting there and I'm just going, these deals just keep getting better and better all the time. And honest to goodness, with just a handful of some really good self storage, you literally have an entire retirement plan built out here in many respects. Do you not?
It could be.
Well,
But
it very well could be, could it not? Like
yeah.
if you're going from, so legitimately you're going from, I believe it was like 152 storage units now. After you execute your plans of your phases, how many more units are you planning to add to the current portfolio, and also one you're about to close on as well?
I would say that we will add about we can add in the next 2 to 3 years, we can add another 200 or 300 units without going into more facilities. Just
Yeah,
Petrolia and Champlain can accommodate, I would say, conservatively another 200 units.
and
And
it's a
and
lot more efficient to add it to things that you already own as opposed to going and buying another self storage
oh
facility, if
yeah,
you will.
oh yeah,
Right?
yes, yeah.
How
But
much would it? How
because the
much would?
demand is there, right?
Yeah,
Sorry.
how much would it cost to put a 10 by 10 unit up, in your best estimation for a cost to put up just one of those 10 by 10s?
The square footage, if we put it in a building,
Yeah.
right? If we go for a full building with concrete pad and drainage and all of that, is costing about $80 a square foot. That's kind of give or take. Prices are changing, but in Wyoming, we just added a 3,600 square foot building,
Yep.
and it was about 80, about 85 a square foot complete. The
Okay.
building installation, site works, and everything.
Okay.
Champlain might run around that. So depending on the size, right? Let's
Yeah.
say a 4,000 square foot building will run for about maybe 240,000, maybe something
Okay.
like that. But
So
but it
okay, let's just
produces.
hang on a sec.
Yeah.
So let's call it 240,000. How many units in there?
It can go about 28, depending on the configuration, right? It could go maybe 30 units, 28 to 30
Okay,
units.
let's use round numbers. Let's use 30. What kind of rent can you get for that?
A building like that will produce
For 30 units. Yeah.
you can get about 3,500 to 3,800 a month on one building.
Okay. So 3,800. So essentially you're getting just shy of $4,000 rent on a $240,000 acquisition in rough terms.
Correct.
Ruben.
Yes. And
Ruben, here, take my money, please. And those are fantastic numbers, by the way.
Oh yes, and the good thing is that even putting one more building, like for example the one in Wyoming, it doesn't increase the expenses in the same proportion because the building is new. There is no maintenance, literally, right? The property taxes will increase a little bit, the insurance will increase a little bit, but compared to the new income that you can produce with a new, that's what I was saying, right? That if you don't have extra land, it kind of doesn't make sense because that's where you get the uplift much better than in an apartment building, because when you added the building, you shoot up the income, right? Like you can shoot up 30,000 more a year, but the expenses are not going to go in the same proportion.
Yeah.
So that's the good thing of having extra land. It just takes about 1 year to get one building in place.
Yeah. And I know for a fact there's an entire other line of questioning we can go down about the operation of it and the software you use and how you collect and the marketing and the signage and all that other kind of stuff. But suffice it to say, you've acquired some self-storage units, you're acquiring some more, and you have multi-phase plans to expand. Are you looking for some capital partners right now, Ruben?
In fact, yes, we are at the moment. We are, in order to close Petrolia and expand Champlain, because that's what I call it, and that's the way I'm presenting it. I'm saying this is one single project where we are targeting 900,000. So what we're gonna do is we're gonna sell equity out of the company that owns Champlain, which is gonna be a good benefit because the diamond in the rough is actually that property in Champlain, because with 22 acres, there could be other type of businesses in there. There could be maybe in the future residential lots. I mean, the city is not allowing that yet, but who knows, right? But what I'm saying is the potential for that piece of land is big. Petrolia is also good, but it's a smaller size. But when we put the two together under one umbrella, then the investors will benefit from this too. And then we can go to expansions, and we can go probably to acquire another facility in another place. I don't know yet, but so that's what at the moment, we already started that last week actually, doing one-on-one presentations, and so we had to close Petrolia in November 30th. So we need to get that portion.
And how are you doing that for structure wise? Are you just doing like corporation and people buy shares in that corp? Are you doing it as a joint venture? Are you doing it as a limited partnership? How are you structuring it?
We are keeping it simple in the way that the company already exists. It's called RMDR Storage. So what we're gonna do is we're gonna issue preferred shares
Yep.
on our MDR storage, preferred non-voting shares, because make it very simple for the investor. They don't have to put any guarantee or anything like that. I mean, we take care of that.
Yeah. You already got the
And
financing. Yep.
yeah, and they're just gonna purchase, the shares at the share price that we put it, until we reach, 450, which is what the first target.
Yep.
And then the other 450, we can get it in a corporate loan from the same investors. Like they can come back and say, well, I can lend this money at a percentage, 6-7%, something like that,
Yep.
for 5 years until we refinance.
Okay.
We wanted to make it simple. Yeah.
Yeah. So right now you own 100% of it. Is that correct? And then
Yeah.
how much are you offering how much equity are you offering to an investment pool parties to come in?
We are offering 23% of our MDR storage, which equates, we made a calculation on the
Yep.
equity, which equates to 450,000. But by the time we factor in the land and the expansion and all of that, it's going to be a good number down the road in about 2 or 3 years. That the equity is going to go kind of high. Yeah.
Nice. Wow. That's
Yeah.
sounds like an incredible opportunity. And so Ruben, if somebody is watching or listening to this and maybe they're interested in, having a call with you, whether it's maybe they have some capital they'd like to put in, or maybe they have an interest in self-storage, where would be some of the places that they could get hold of you?
Well, they can I mean, the easiest one is to send me an email at ruben@rmdrglobal.com.
Do you have a phone number?
And the number is 604-353-7573.
So I would imagine here, and I got on the screen for everybody, your website is rmdrglobal.com, and there's a connection there, and there's phone numbers and emails and all that kind of wonderful stuff there, isn't there?
Yeah, and then we do a phone call. I like to find out if there is a fit, for the investor and a fit for us. And then we do a one-on-one. I have a kind of very simple slide deck explaining, this potential, and yeah, so we take it from there.
Yeah. Well, here's the thing, guys. And I'm gonna call a little bit of an audible, if you will. Audible in football terms is sometimes you call a change of play on the fly. Ruben has this wonderful presentation, like self-storage 101, where we go into a lot more detail, a lot more images, a lot more pictures, a lot more analysis. And Ruben, would you be open if you and I did like a Zoom webinar where you could share that with people of the community? And if anybody's interested in learning deeper on self-storage, would you be open to doing that?
Yes, perfectly. Yeah, I would love that. Yeah.
Okay, so here's the axe, but guys, we're only going to commit to it if this is of value and of need for you. So guys, if wherever you're listening or watching, put some comment in below. Put a comment in, would love to know more. Tell me more. Want to learn more about self-storage. Because I tell you, Ruben, some of those numbers that you were just sharing, those are some fun. And I know a couple of them were absolutely just home runs, knock it out of the park, right? But is self-storage something everybody can do, would you believe?
Well, one of the things that we have learned in the industry, because I participated in different forums and conferences with the big guys, in Canada, Public and U-Haul, and those are pretty big companies, right? They own only thousands and thousands of units, but they actually like to share. That's one of the things that I like on these conferences. I can ask questions to these guys, that owns this number of units. But one of the things that we have learned is that not every self-storage project is successful. Yeah, I mean, I don't want to put the kind of the incorrect idea that, hey, I just get a plot of land in here and I'm gonna put these buildings. No, it's you have to do some homework, like I was explaining briefly, demand and location, and then the city, permits and all of those things. I mean, we've been in the learning. I mean, we are learning every day, with every one of these townships, expansions and all of that. Like, I learned a lot
Yep.
in the expansion in Plimpton, Wyoming, with that building. I mean, many things I didn't know. So that's what it is. Is you have to be, follow a system and
Yep.
certain steps. Not to.
Well, sorry, I'm going to pull another question out of the hat here. So if you were to, let's just limit it to three. What would you say the three biggest factors for success in self-storage would be? What would you say?
I would say the first one, whoever is going to operate a self storage like we are doing, is the education part, the learning of all of this. Sometimes it seems little, but from the software to the site to the demand to all of those things, that is important. And so it starts with oneself, right? I mean, it's not nobody else is going to come and do it. The other one I would say is work. This is not passive, and sometimes people might think, and I don't want to send the message that this is passive. This is a business. It's actually a very dynamic business. It's more than the buildings, right? We get phone calls, we get emails, we get people that want to rent now, and we gotta get in touch with the property manager. So it's very dynamic. My wife Mary Lou is a huge part of this equation, because she handles all of that portion of it, the what we call the property management side in our company. She does all of that. She's in constant, not daily, but very frequent communication with the property managers that we have in Sarnia and in Champlain. So it's dynamic. So
Yeah.
it's not passive. So the person, I would say, the factor is you have to be willing to be on that dynamic business
Yeah.
at a distance, right? If you are from here,
Yeah. So the
and
first one you mentioned was you need to be educated, like most things in life, right? You need to be well educated. Number two is it comes down to the business operations, right? It comes down to the operator of the business and treat it like it. If you have weak systems in your residential property and you have weak systems in your business, it's just going to be probably magnified by 10 once you get into self-storage. Would there be a third one you want to share with us for a
yes,
success factor?
yeah, the third one I will say, and is for my own personal reasons, is to have a coach, to have someone that can guide you through the process. If you say the first one, like we did, through guided to that. I mean, there are different ways to do that, but I will say, you gotta get someone external as a coach, as a mentor, that can guide you through different things. Independent if the coach or the mentor is not an expert in self storage, but I would say that will have some knowledge of real estate, right?
Yep.
Like,
Well,
yeah. So
and I will also say I'll echo one thing is that you need a mentor, but at the same time, the student needs to also be a fantastic student. So I'm going to give you an A+, Ruben, here, by the way. So you've just absolutely just crushed this. This has just been fantastic. And you know what, I'm as you can tell, I'm a fan. I'm a fan of everything you've ever done. I'm a fan when you touch something and you put your stamp on it. You take the time to sweat the details. Right. Most entrepreneurs are visionaries and they're wheeler dealers and they're just, moving and grooving and shaking. It takes a very special breed of a person to be able to sweat the details, dot the I's, cross the T's, and just really go through the systems and the process. And I would say that's probably your superpower when it comes down to all of this, is your ability to manage the process, to build a process and execute against a plan. So congratulations, my friend.
yeah, thank you for that. And I can add one more, maybe, right?
Oh, look at you. Bonus time.
Well, bonus time. I would say just do something. I mean, if someone is listening to this, like you were saying, a 55, well, just do something, take action. I would say a lot of people, they thought that we were crazy when we got into Champlain, because that was an abandoned property. I mean, really, that's what it was. On the presentation, I will show you the pictures of, it's how it was. So so we had the courage, I would say the courage to take the action and go there and not be afraid of failing. I didn't know what it would happen. I didn't know that if the people will come in into Champlain and rent. I even thought that, we discussed it with Mary Lou. I said, well, should we change the color of those buildings? Because I thought that the red was like a bad vibe because the property was abandoned. I mean, it was one of those things, right, that you think, right? But at a certain point, I said, no, we are not going to put money into painting those buildings in a different color. Let's see what happens, right? But once the people started renting and getting, good references from the place, it's working. But
Yeah.
but we were not afraid. I would say that's the key part, right? Not
Yeah.
being afraid of doing something and failing. I mean, I would say, I always ask the question. I say, what is the worst thing that can happen? What can go wrong? If it's something that I can live with, right? Then okay, let's do it. That, I would say that will be kind of my final.
Wow, what a wonderful bonus lesson on how to leave this is the courage to just shoot the puck and just do it. Take the action. Wow.
Yeah.
Well done, Ruben. That's fantastic. Yeah. So, okay, guys, I hope you've enjoyed this wonderful conversation with Ruben Ugarte, and we have more coming. There's going to be some more self-storage materials to come. And if you guys are interested in having a conversation with Ruben, wherever you're watching or listening, there will be contact information there. Okay, gang, have yourself a wonderful day. Bye for now.
Thank you.
Hey, I sure hope you enjoyed this video. If you are interested in moving forward with velocity, if you're interested in being a successful real estate investor, only 2 simple next steps from here. Number 1, below where you're watching this, there will be an opportunity for you to subscribe. And over here will be a hand-selected video for you to keep moving forward. Continue your journey forward. Just click on over here for that hand-selected video for you, and we'll see you on the other side. Thank you very much.